SBA loans are funded and serviced by lenders and funding partners. It is guaranteed by the Small Business Administration. There are several types of SBA loans. Some of them are 7A, 504, and USDA Business and Industry. For funding scenario purposes, the subtypes for SBA loans are business acquisition, construction, equipment, express line of credit, franchise, and startup. These are all subtypes of primary SBA products. You may have a client come to you and ask for an SBA loan with one of the subtypes. For example, a client might say, "I am looking for an SBA franchise loan." There is no such thing as an SBA franchise loan. This would be an SBA 7A loan, and a franchise is one way you can utilize that product. Your client may not be aware of this. So you may need to educate your client on the various uses for the primary 3 SBA products. This will not be a huge hurdle, as they can certainly use these products to find all of those different subtypes. For the SBA 7A loan program, the funding limits are up to $5 million, and the terms are up to 10 years for working capital and 25 years if there is collateral involved. The benefits of 7A loan program are very flexible use of funds, longer terms, lower rates, money down as low as 10% and 15% for startups, DSCR as low as 1.15, and guaranteed up to 75%. Typical uses for this type of loan are working capital, machinery, equipment, land, real estate purchase, renovations, new construction, and leasehold improvements. When you are working with your client, ensure that they understand the role of the SBA in these types of transactions. Many of your clients will think that an SBA loan is funded by the SBA. It is important that your client knows that a third-party lender is the one who actually lends the capital and that the SBA guarantees a portion of the loan. This is important because very often your client will view SBA loans as a charity or grant. This is obviously not the case. A lender is lending money and expects to be paid back. Furthermore, you may have noticed just a moment ago that the SBA only guarantees 75% of the loan. So what happens to the 25% of the loan that is not guaranteed by the SBA if your client defaulted? You guessed it! The lender would be on the hook for the rest of the money that is not guaranteed. You may have also noticed that your client will always need to put down on any SBA products. The amount of money put down on an SBA loan is entirely at the discretion of the lender. Ensure that you manage your client's expectations, as it is not uncommon for them to need to put down up to 25% of the amount being borrowed. The SBA 504 loan program provides funds to help small businesses with long-term financing. This can be used to purchase or expand business property, including real estate and equipment. There are 3 parties involved: a third-party lender, the borrower, and the certified development company. The CDC or 504 loan program provides long-term fixed-rate financing for major fixed assets that promote business growth and job creation. 504 loans are available through certified development companies or CDC, SBA's community-based partners who regulate nonprofits and promote economic development within their communities. CDCs are certified and regulated by the SBA. The maximum loan amount for a 504 loan is $5.5 million. For certain energy projects, the borrower can receive a 504 loan for up to $5.5 million per project, for up to 3 projects not to exceed $16.5 million total. 504 loans are available exclusively through certified development companies or CDCs. Typically, you would want to find a CDC in your client's desired area to ensure you are dealing with a qualified lender. Your software platform will ensure this step is already executed. While a CDC is required for lending, all 504 lenders will already have relationships with the various CDCs across the United States in order to help streamline the process of getting your client funded. Repayment terms can be either 10 or 20 years. Interest rates are pegged to an increment above the current market rate for 5-year and 10-year U.S. Treasury issues. To be eligible for a 504 loan, your business must operate as a for-profit company in the United States, have a tangible net worth of less than $15 million, have an average net income of less than $5 million after federal income taxes for the 2 years preceding your application. Other general eligibility standards include falling within SBA size guidelines, having qualified management expertise, a feasible business plan, good character, and the ability to repay the loan. Loans cannot be made to businesses engaged in nonprofit, passive, or speculative activities. For additional information on eligibility criteria and loan application requirements, Small businesses and lenders are encouraged to contact a certified development company in their area. There are more than 240 CDC nationwide, each having a defined area of operations that covers a specific geographic area. Typical uses for SBA 504 loans are land improvement acquisition, real estate with equipment, new construction, and real estate improvement. We also work with the largest franchise lender in the country. Preferred franchises where industry experience is not needed and down payments are much lower than typical startups. Examples of these large franchises are Christian Brothers, Planet Fitness, Sports Clips, Great Clips, Goddard, Primrose, Kids Are Kids, Lazy Boy, Subway, Little Caesars, IHOP, and more. You can find all types of franchises. However, if they are on this preferred list, your lenders will be very flexible on experience and even money down. As a broker, it is important to know that those interested in purchasing a franchise can be a great source of deals. Many franchise groups will have their own form of in-house financing, but it is typically a white-labeled bank product. This means the likelihood of having many qualified borrowers is not likely. Now, you would be their only source of capital in order to pursue this opportunity. Even franchise brokers are great referral partners because if they cannot get their clients financed, they cannot sell a franchise. The average commission for SBA loans is 1 to 4 points or externally negotiated.